Alright everybody, let's just go over the trades today and see what's going on and what's setting up. So there was a trade in gold today. Right here, this is the gold. It went down here to test the breakout. This is the breakout right here. It says BO, green bar. That's the breakout. The market went and it tested this area, this level that broke out. When it tested this area, they started buying. All right. That's the 2 times average up volume, biggest up volume in 18 waves. Biggest up volume in 18 waves. Price wave is biggest in 4. So that made a higher high. The only problem with this trade was the pullback retest. That really screwed up everything. So this was the buying activity, but this maneuver here is a spring or a shakeout. They're basically the same thing. So this move here, it was meant to clear out everybody. All right. So this was the buying activity, telling you the market's going up, but this is a shakeout after the buying activity. So after the shakeout occurred, then price went nuts. All right, and it gave you two legs, one here and the second here. So 1 leg, 2 leg. All right, these were the 2 legs. If your stop was not taken, meaning it was a little bit below the low, then you would have been safe and caught this 1, 2. You know, it's not a bad move. Even if you got in around here, this is not a bad move. Yeah. And we'll see if it continues higher. So that was one trade that occurred today, if you survived the little shakeout. And the second one was on the euro. So on the euro, a very clear opportunity right here. Market pull back, A, B, C. On the C leg, buying activity. Right there, 2.5 times average up volume. Biggest price wave in 15 waves. Biggest volume in 12 waves. All right. After that, what they did was just some time manipulation with shit over here. So this is just time manipulation, and just some crap, right? To do, to get people in to move their stops higher. 1, 2, 3, sweep them here, right? But the pullback to test was right there. All right, right here, where it tested the this break, and as it tested the break, it gave 2 legs, 1 and 2. The second leg was above the prior highs. So these weren't massive moves, but these are profitable, tradable moves. You just need to know that there's some time manipulation that's designed basically to get you in the trade. That's what it's designed to do, is get you in the trade and then stop you out. All of this, you can consider it also called inducement. All this is inducement to get you in at higher levels, to make you think that the market is going to go without you, right? So when it makes this high, people want to get in. When it makes this high, they want to get in. Then it sweeps both these lows, and they get caught. Then they see this, they want to get in here, sweeps that low only to go down to the area it was meant to go down to. With all this inducement, and only to go and give the low risk trade opportunity. And and then gives the move, the 1-2, here and here. Then after that, it basically just went to the minor resistance, and then the selling started. Okay. All right, and then finally on the ES, it's all the way back here. Was it there? I forgot where it was. Anyway, I forgot where it was, but there was opportunity because it made that lower low. You know, it took this low, and buying activity came from here. If you didn't catch this, and I'm going to explain this. All right. So first, I'm going to explain this using this chart, the tapering chart. So market is up here, lack of demand up here, right? And then what happens is it pulls back. So up here, it starts to pull back. Just like you see, it's going down. There's actually some distribution in this area right here. This, you know, it goes up, down, up, down, up, down. There's some distribution there. And it's followed by a break, gives 1 test, 2 tests, and goes down here. Now, if you don't know what you're doing, you might think this is totally bearish, and it looks that way if you're only looking at one time frame. But really what's going on is that this area here is a very bullish area, and it's being tested. So this is where buying activity came and took price up. That buying activity is now being tested. So this is the buying activity right here, pulls back to that same buying activity. Now, volume increases, a lot of effort, and no results. If you take a look at this piece of movement, it's a little bit of volume that does a lot of damage. If you take a look at this, it's much more volume. This right here is 51,264. This is 24,195. So more than double the volume and half the spread. So why is it doing that? And you can see the big prints. These big prints are demand. How do you know that? It has no follow through to the downside. If it was supply, it would have had follow through to the downside. If it's demand, the volume would be at the extreme lows, and it is at the lows. So that's why you know it's demand from a demand area. This is the demand area. All that effort, no result. Testing the demand area. More volume, less result. Volume is at the lows. Good. And actually what you can say here is that supply has met demand. That is a certainty. No question, no interpretation, nothing. Just that supply has met demand. You can make that judgment that supply has met demand because of the volume and all of that. But you can't really say that it's demand yet. You just say supply and demand met each other. Supply met demand. It is only after ease of movement that you can say demand overpowered supply, took it over, and that's here. This here indicates that demand is in control. So demand is in control now because supply met demand as indicated by effort, and demand won as indicated by ease of movement to the upside. After that, price then breaks, goes to resistance, and then pulls back. This pullback is interesting because again you see effort, no result. So why? Because this is buying activity. Why? Because at the extreme lows. At the extreme lows, effort, no reward, or less reward than this bar, which has less volume. This bar has less volume and more spread. This bar has more volume, less spread. Why? Because demand is encountered. As price moved down, it encountered demand. Demand is here, encountering demand. Supply encountered demand. Ease of movement to the upside means demand won. Pulls back, gives the test, boom. Eventually, just dibble dabbles here and then finally breaks. And now we're over here. So this is the way to read price volume activity, and it's out of different approaches. I think this is the easiest way to read it. There are a lot of other approaches that look at like 10 different things from this to that, and what I'm showing here is I think the easiest way to read it. All right, and also if you get every little print, it's insane. You want to club the ranges or the prices together, so it makes for a better and easier read. Too much detail, you won't be able to read it. No one can. It just leads to confusion. So this is, as the ranges change, as they increase, you increase the box size. As the ranges decrease, you decrease the box size, and all of that. All right, so I did the read of this market. The key thing to remember was this was a demand area, so what are you looking for as price retest this? You look for demand to enter. Does it enter? Yes, it does. How do you know? No follow through. What does that mean? Demand is coming in. Why is it coming in? It's coming in at the lows. What does that mean? That means supply and counter demand. What are you looking for next? Ease of movement. Do you get it? Right here. How do you know it's ease of movement? Volume comes in, price moves up. That's ease of movement. Then demand is in control, and it will continue to go up until supply takes control. So come back, pull back here. What happened? Demand in control? Yes. How do you know? Volume increase, spread decrease, volume at the lows. Supply encounters demand. What should happen next? Ease of movement. Do you get ease of movement? Yes, right here. I mean, this is not really exactly ease of movement. It would have been better if the ranges were bigger, but it does take out the high of the prior bar. So anyway, this is the easiest way to read price volume. Right, so that's about it. We'll wait for tomorrow and see what opportunities present themselves. It's quite clear that markets are, they're giving opportunity after opportunity. You see the ES, this high is opportunity, this low is an opportunity, this another low, another high, here to here. Lots of opportunities. You won't get them all, but who cares, right? All right. Thank you. Have a good day.